With a crazy volatile market today, mortgage rates actually ended up flat. Well, I can't say the same thing happened in the stock exchange. So we got the Dow Jones all the way across the board. Other than the Russell 2000, it was all down across the board. We had mortgage bonds. They were down most of the day. They recovered a little bit through the afternoon. What happened? Well, the Trump big tax bill doesn't look like it's going through today, and there's hitting some snags. So we're going to discuss that and how these all affect what we're looking at today when it comes to mortgage rates. So my name is Dan Frio. I actually do this report 2 times a day to help you guys figure out what's going on with these and the whys behind it. The cool thing here is I'm actually a federally licensed mortgage loan officer. I work at a federal bank. Yes, that's what I do. But our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? I'll give you that information at the end of this video. What you're here for is these things right through here. So let's get over to what we're seeing today. So the stock market, well, it was treading water most of the day, but then the indices went negative at the end of the day, ending up in the red. We call this all the same thing, kind of in the mortgage market. We watch mortgage bonds here on this channel because this is how we follow mortgage rates, folks. So if you're new to the channel, how we monitor mortgage rates here is we monitor the mortgage bond that trades on Wall Street. All you need to know is if this number goes up, rates are coming down, and if this number goes down, rates are going up. There's an inverse or kind of a yin-yang effect to all these things. So that's what we're seeing today. So the market was down 16 ticks. Really nothing moved the market, so we're taking those are flat. But let's get over to this bill that's happening right now. The big, juicy, big bill that they're talking about and how it's getting snagged in Congress right now. And one of the biggest reasons or the biggest snagging points are right down through here. And I want to kind of put my 2 cents in on this because that's what I do and that's what you come here for. So here's what the big debacle is right now. In a meeting on Monday, the speaker offered to raise the cap on SALT deductions from the $30,000 limit to set it in legislation at $40,000, but only for 4 years, and people make less than $751,000. Said people familiar with this matter, after 4 years, the limit would snap back to $30,000 and with a $400,000 income limit cap. So there's a lot of mumbo jumbo there, but I want to just show you something. What this is saying you can have kind of deductions, state and deductions on things that can't exceed a certain limit. So right now they're looking at $30,000. Some people saying that's too much or not enough, and others saying $40,000. I think that already got rejected. So they're saying, well, this only really helps the wealthy. Well, this is one little piece of or chunk of this bill. So I wanted to go over and just show you, because I do real estate, and that's probably one of the biggest deductions people get or might lose out on in this kind of this bill that's going on. I want to show you how not it's just the wealthy people that might get benefits from this. So this is what they don't tell you on mainstream media. So let's get over to break down some of these numbers. Okay, so here's what I did. I just went in and said, I just did a Google search and said, how much would real estate taxes be on a home in New Jersey for $350,000? So it does the research and it comes down and says $7,805. Okay, if you're shocked by that, don't be. Okay, so that's one piece of this puzzle. So that's a part of the deduction that they're talking about. And right now that deduction is at $10,000. Okay, other things you can deduct in most cases is your interest on your mortgage. So they sometimes say you should be able to, you shouldn't be able to. So this is depending on your tax bracket. This is where you're going to have to get your accountant involved. But I just did some research and I said, okay, if I was buying a $330,000 home in New Jersey and I was putting down 5%, the rate was 7%. What would my payments be? Specifically, what I wanted to find out is how much interest I would pay, because you can also write off your interest. So I went down through here and I did the calculator, and then I went over to here and said, okay, I'll just pick year 2. In year 2, you average about $1,800 a month in interest. So I slide over to my Chat GPT, like you guys know I love it, and I said, okay, if I pay $1,800 a month for 12 months, how much for the year would I be paying in interest? Well, it comes over here and says $21,600. Well, you add that to the taxes I'm paying on this property, it means I have $29,000 in interest and real estate taxes. Okay, so that's what they're saying. Okay, maybe we keep it at 30. Well, this person, I'm sure, that's buying a $350,000 home in New Jersey probably isn't a multimillionaire. So they're missing out on deductions. So a lot of times people have to get out of their bubble to figure out, does this help you only, or does it help everyone? And you can't exclude a lot of people from this. So that was just one example that I wanted to bring up. So I always tell you or ask you to do this. Don't judge a book by its cover. Make sure you understand what's behind all this. Why do we talk about these things? Because all of this plays a role in what's happening with mortgage rates. So what you're seeing is, the tariff deals going on in Russia and Ukraine, and all these things are trying to loop into this big package they're trying to get in, within the first probably 6 months of the presidency. It's a lot of shock and awe, and everybody's getting through it right now. So how we end up at the end of this, actually nobody knows. So I strongly advise you just come back every day. I'll give you the most recent news that we have, unfiltered. I'm going to show you exactly what's going on with mortgage rates, and I can help assist you if you're looking to buy right now. It is a choppy time. We also, like I talk about on my videos, what I do for a living and how I do things. Think of it this way: the market is so volatile right now. Let's say, for example, any particular day rates can go up and down, maybe 0.25%. All right, if you use your local lender or that preferred lender out there, what might happen is, let's say the market, let's say you lock in and then all of a sudden something like, there's probably a big move here somewhere. Say something like this happens. And all of a sudden you can get a rate that's maybe 0.25% better than you're locked in at. So you call your lender and they're like, nothing we can do, you locked in. So if you use our services, one of the things we can do for you, we can monitor this along the whole process for you. If we have at least 2 to 3 weeks prior to you closing, we have no problems locking in your rate. If rates drop in that meantime, as long as we have about 2 or 3 weeks window to close, we can actually move with the market. So you're not stuck in permanently if you lock in. So that's one of the biggest benefits a lot of people use us for, as well as I'm licensed in all 50 states, as well as Puerto Rico. So nowhere out there in the country you can't use me. So check out my services by going just to therateupdate.com. You can schedule an appointment right with me right here. You can give us a phone call. You can even put in your application here. What we ask you to do is, if you put in the application, I'll make sure I don't pull your credit. I reach out to you by text or email to make sure we talk about your loan, what you're looking to do. I want to get the specifics. I want to help you navigate you basically from application, the keys in your hands. So thanks for watching, folks. God bless. Have a fantastic evening, and I'll come back tomorrow and let you know how this stuff starts another day. Have a great night. See you tomorrow. Bye-bye.